Hey there, party people. We're going to talk about risk here today. You know, we've got three things that we need for our profitable trading. We need to have a system that we believe in, that makes sense to us, we have confidence in, fits our beliefs about the market. We need to have risk rules that help us achieve our goals, which is what we're going to talk about right now. And psychology, we have to have the mental makeup and a focus on the execution of our strategy in order to get where we want to go. So let's talk about number two, risk. And this one comes up a lot, actually, more than I would think. So let me share my screen here with you, and we will get on it, shall we? Let's get on it. All right. So the first thing, what you're doing here is when you have a trade, let's say like me, you're trying to spread your broker risk around, which is what I do a lot of, actually, because I don't believe in having all of your trading capital with a broker, and I definitely don't believe having all your trading capital with one broker for many reasons, most of which is the risk, spreading out your risk, making sure that you don't have all your eggs in one basket and a broker decides to go bust on you, sort of thing. So let's say that I want to run a trade on two different accounts, but one account is set up with micro lots and one is set up with standard, which is actually the case right now in our small accounts, big profits course. I've got these two accounts set up. The members are able to follow along with the trades here as we grow a small account. You can click the link below this video to get more information on that. But basically what I do here is I go, all right, so let's say I want to take a trade in, I don't know, the Aussie yen. Let's do the Aussie yen. I hold this account in USD, these accounts, I should say, in USD, because I think the US dollar is going to gain against my home currency, the Aussie dollar. So I'll go Aussie yen here. That's my currency pair. I'm going to use my base as USD because that's what I'm trading. And let's say that I've just got like a standard account, okay, which I do. And I'm interested in finding out what one lot is, okay? So what I've done is I've just Googled pip calculator, and I've landed on the XM broker one here. So it's going to tell me how much is a pip for a standard lot. And it's going to be around $1 typically, or sorry, $10 typically. And it's $8.92 at the moment, okay? So $8.92 for a $100,000 lot. Now, let's say that I'm trading this tiny account. So I go, okay, well, how big is my account? Right now, the account has, you should be able to see this on here. We're going to do Aussie yen, right? Here's my Aussie yen chart right here. And you can see it's falling. So the 6-hour chart. I go, okay, the account has $482 in it, all right? So let's recall that, $482. And let's say that I'm going to take a trade. I'm going to sell here, and I'm going to put my stop loss up above this candle right here. Okay, so that's going to be a stop loss at 79.40, we'll call it. And I'm going to sell at 78.63. 79.40 and 78.63. So let me go over to my handy dandy calculator here, and I know they got $482, and I'm going to risk, let's say I'm going to risk 2%. I know that I have a yen, so I need to select yen pair actually here. So it's a yen sell trade, and I said that my price was going to be 78.63 and 79.40 was my stop, right? So 78.63 is 79.40 is my stop. 79.63 is my entry price. 78.63 that should be. And I know my price per pip is $9.82. Remember, because we use the calculator here. Or sorry, $8.92. I'm dyslexic. There you have it. So $8.92, which means with a mini lot, it's going to be 8.9 cents. We'll round that up to 9 cents. Okay, 9 cents for a mini lot. Okay, or a micro lot, really. A micro lot. A mini lot would be 89 cents, 89.2 cents, and then So if you're thinking about in terms of lot sizes, so we ran 100,000, right? 100,000 lot size, which is a standard lot size. That was $8.92. Then we say, well, what about a mini lot, which is a $10,000 lot size? That's 0.892 cents, or we'll just round that up to 90 cents. And then what about a micro lot, which is $1,000? Now, the reason why this is important, because I'm going to show you a different account in a minute, and you'll see how this is confusing for a lot of traders. So now what you have here is I go, okay, it's 9 cents a pip. So if I'm going to risk 1% of my $480 account, I can risk $4.82. It says I can take one micro lot. What if I was risking 2%? It still says that. What if I'm risking 4%? Okay, now I can risk 0.03 micro lots, right? 3 micro lots. So let's say I'm going to risk 4%. I'm pretty crazy or whatever, or even 5%. Let's see if that changes anything. No, it's still at three micro lots. So this is what I would do. I would go into my account here, and I would enter my trade, right? Like this, new order, and I go, this is a pending order. Let's say I will sell stop at, you know what? I'm going to shift everything down 10 pips just because I don't want it to get triggered. I don't actually want to take this trade right now. So we'll go 79, 53, because we said it was 63, right? And I'll put my stop loss all the way up there. Sorry, that should be 78. 78. And then we're going to do this on another account, and I'll show you why this gets confusing. 79.30 for the stop loss instead of 40. Just shifting everything down here, and we're going to go 3 micro lots. Okay, so now watch what happens here. See how it... Ah, 78.53. See how it puts the stop loss up here? Now, if you're ever curious, like if you're ever unsure, put your cursor on MT4. It'll tell you how much it's risking. It's risking 77 pips, and it's risking $20.61 USD. Now, compare that to your calculator and make sure that's right. Yeah, that's right, because it says I can risk $24.10, and I'm actually risking $20 and whatever it was, $20.61. So now what I'm going to do is I'm just going to delete this order because I don't want it to get triggered. So we'll go ahead and delete it. Boom. Okay. There you have it. So I've deleted that order. Now what I want to do is shift over to another account. This is another account. This is a different broker who's offering micro lots. What this means is I actually have use a different base lot size. And I'll show you what I mean by base lot size. So I'm going to go to AUD micro, and this is going to be the 4-hour chart. So it's going to look a little different to that 6-hour I was just showing you. But what's interesting about this is if I take the same lot size, it's going to be a completely different risk amount. And I'll do it right now. Let's do it. Let's take a trade right now, or at least enter a trade order. I'm not going to actually take it. But we'll do the exact same thing that we did on the other account. So we said 0.03, right? Stop loss is up there at 79.30. And my sell stop, I'm going to put a sell stop down here at 78.53, right? Now look at what happens in terms of the risk. 0.03 lots. Oh. Oh, I think it's because I'm not trading a big enough size. We'll do 3/10 of a lot, okay? Still not. What if we move this down a bit? Sometimes they do this when it's too close to the market. We go to 49. Okay. Now look at this. I've done 3/10 of a lot, and look what the risk is. It's $2.17. and it's literally 10 times the lot size. So this is a completely different result, obviously. So what that means is I have to be aware that the size that is calculated in this account is different. It's completely different, in fact, to what I had on my other account. So what I need to do here is I need to like delete this order and redo it. And in fact, when I use my risk calculator, I'll show you. Use your risk calculator right here. I should have defined my lot size completely differently here. So, or my pip calculator. I should have actually said a micro lot, okay, where one lot equals 1,000. Now look, I calculate it and look what it's going to tell me here. 9 cents a pip. It's saying that it's 9 cents a pip for a micro lot, right? So obviously if I'm trading at 10,000, it's going to be 90 cents a pip, like we talked about. So when you do these, when you calculate your lot size, you just have to be aware what kind of system, what kind of broker am I using? What kind of account am I using? Because if I don't have the same, if I don't know what I'm trading, I'm going to get my risk completely wrong. And the best way to check on that is just go up, click, hover over your stop loss, put in an order that you know is not going to trigger, right? Or you hope it's not going to trigger in the next couple minutes, and hover over that and see and make sure that it's not going to, make sure that your risk is right. And you go, okay, 1% or 3% should be about $20. If it's like 200, you know it's off. If it's $2, you know it's off as well. That's how you can check. Okay, so I hope this helps. I wish you very happy trading, and we'll see you in another video.